My name is Anupama Bhutra, and I would like to welcome you all on behalf of Arihant Capital for Meghmani conference. The flow of events will be management will be briefing us about the company. Then we will open the session for Q&A session. And anyone wishing to ask any questions or queries, they can either use the raise a hand option or they can post their queries in chat box or Q&A section. So we will be taking questions from all these three places. Without wasting much of time, today we have Mr. G.S. Chahal, CFO from Meghmani Organics, and we also have Mr. Nishant Vyas, IR of Meghmani Organics. And now I would like to hand over to the management. So if you could brief us about the company and if you could take us like through recent quarters, Q1 FY24 till now, what kind of progress have we made in different aspects and future goals and aspirations of the company? So over to you, sir.
Good afternoon, everyone. And first of all, thanks for taking time to join us today and hear about the organization. So I will start with the briefing about the organization. So many of you might be interacting the first time. Meghmani Organics Limited started 3 decades back in 1986 with the manufacturing of pigments at Batwa near Ahmedabad. So am I audible?
Yes, sir.
Yes. Okay. Then company diversified into agro division in the 1995, starting one plant at Charodi. And then the journey started. And today we have 8 manufacturing sites currently. 4 in agro division, where we have 3 for technical manufacture and 1 is for formulation. And 3 units are in pigment division. 1 is manufacturing of green and 2 are pigment blue, which we will discuss in detail. And the new site which is under commissioning is for titanium dioxide, white pigment. So now coming on the revenue mix, how the composition of the revenue in Meghmani Organics Limited. So it is more from the exports. We generate our 80% of top line from exports in both the divisions, while 20% is from the domestic market. In case of geographical presence, we are present across the globe in all the continents, almost 15 to 20%, and spread across all continents. We have our customer base, major multinationals are there like Sumitomo, Adama, and all that. So we supply our agrochemicals to them. In case of agrochemicals, we are among top 10 manufacturers in India who have presence across entire value chain. So we manufacture our own intermediates, technicals, and then formulation. In case of sales of these products, we have 2/3 sale coming from technical and 1/3 comes from the formulation, which we supply. And it is in both our brand also and in the customer brand also. In certain countries like African countries, where they don't have manufacturing facilities, where we supply in their brand in P2P model. While others we supply in the formulation. In domestic, we have our own brand, where we have more than 36 brands presence, and we have present in 19 states. In case of product profile, agrochemical, among our top 10 products, we say major is herbicide and insecticide. In herbicide is 240. Sales comes around 15 to 20% from herbicide, and rest is the pyrethroid range of insecticides. Cypermethrin, then bifenthrin, lambda, permethrin, perfenophos, and with the latest products which we are coming up with, fluindamide, then pyrometrizin. So these are the new products which we are adding. And last year only we have added 5 new products in our new multi-purpose plant, which we commissioned in the last quarter. In case of pigment division, we have phthalocyanine pigment, which is pigment blue and green. We are largest in India and 3rd largest globally. We have diversified recently into the white pigment, which is titanium dioxide. we acquired one company, Kilburn Chemicals Limited, in December 21, and they have manufacturing facility in Dahej, which with a huge land parcel, which we have acquired. And first phase we are commissioning, and this is under trial run now. And in the next quarter, we are expecting to stabilization. This is in case of pigment division. In agro, we completed our multi-purpose plant in last quarter of FY23. So which will be ramped, capacity will be ramped up. New products we have brought in that multi-purpose plant, which we said fluvindamide, then lambda, there is a cyclothrin, beta cyclothrin, ethiprol. So these are the new products which we are coming up with in that facility. And in the new segment which we are entering into, that is crop nutrition segment. We have tied up with IFCO for the technology, and we are coming up with the nano urea project where we will be spending 150 crore of capex, and we will be commissioning that project by March 24. Top line on the full year basis and full year operations, we should be getting around 1,000 crore. Capacity of that plant is around 5 crore bottles, and we expect to commission by March 24. And looking into the current market scenario, so as all of us are aware that chemical sector is undergoing a tremendous pressure, and mainly the companies which are serving to the export markets. We being exporter of more than 80% revenue coming from exports, we are also impacted. And from the January onwards, we are expecting things should start improving. So at another quarter, I think we see the similar situation which is currently prevailing. So this is the overall demand perspective. In case of pigment division, demand is subdued from the last quarter 3 of last year, FY23, from October onwards. So that is still going on the same situation, though some improvement is there due to the stabilization of the raw material prices. Recently, again, crude has started going up, gas prices again has gone up, and but as compared to previous COVID and post-COVID period, and supply chain situation has improved a lot, and the raw material prices almost got stabilized, and in line with that, finished good prices also stabilizing. So we see in pigment division also some improvement coming from January onwards. So in case of pigment, because it is hallucinine pigment and major consumption is in the ink, and the use is the ink, where due to this digital transformation, so demand is going down, while this has been partly offset by the packaging ink due to e-commerce increasing, that some extent that has been compensated. But overall growth in this segment is subdued. That's why, as an organization, so we have not expanded any capacity in our existing hallucinine pigment. So we have diversified into white pigment, which is titanium dioxide, and India is net importer. So currently, around 2.5 lakh ton is the consumption in India, and its implication is in paint. More than 60% is in paint. And with the growth capex coming into the paint division in the paint segment, so we see in the going forward that a lot of demand is going to be there. I think double-digit demand can be in this segment. And here we have 3.15 lakh square meter land parcel, which is sufficient to expand the capacity up to 200 ton per day. So existing capacity is 50 ton per day, which we have acquired. It is getting stabilized. Then we have planned to, you can say, sweat this asset and run this successfully. Once we are comfortable, then we will be expanding capacity in this segment. Here, this white pigment is energy intensive project. So to reduce the cost, we are coming up a captive power plant, which will get commissioned in the next quarter before December. So this is the way we are going to expand in this. Looking into the current market situation, capex in agro division, which we planned earlier and we announced also, we are coming with the phase 2, which we have put on hold as of now. And we want to stabilize and set the current assets which we have commissioned our multi-purpose plant, where we have spent 390 crore, and that plant was commissioned in the quarter 4. So that capacity will ramp up gradually in the next year and in the subsequent years. So this is the growth plan. I think current year, as you asked for the quarter first, we took hit of the inventory because prices have gone down significantly from March quarter to June quarter, where the major products which we have like bipenthenone, lambda, and the raw materials, etc. So prices have gone down significantly. So that MTM, जो impact as per the accounting requirement, we have taken hit in the first quarter. So there is no further hit as far as inventory MTM is concerned. So now things should start improving going forward. Yeah. Have we covered anything or anything missed out?
So if you want, you can share a little bit about on Q1 numbers or maybe FY23 numbers for the people who are new to the company. Margins, just top line and a little bit on margins.
Actually, though we have two segments, one is agro division and pigment division. Both have different profile. Our top line again, 80% is coming from agro division and 20% from the pigment division. Margin perspective, EBITDA margin in agro division remains in the 15 to 17% range. And in agro division, in the normal, in pigment division, in the normal circumstances, it is 10 to 12%. But in our case, last year, it was not a good year as far as pigment is concerned. So margins are negative this year in the quarter. So we see going forward should improve. But on a average basis, our EBITDA margin remain in the range of 13 to 15%.
Okay. And sir, could you share any, like if you have any slide wherein the product portfolio has been displayed? Is it possible right now?
Product portfolio, not exactly there in the presentation.
Okay.
But in case of their pigment division, we have 4 products. One is we call it the CPC. Second is alpha, and third is beta, and now fourth, which we are coming away, white pigment TiO2. These are the 4 products in case of pigment division. And in agro, I explained is hypermethrin, permethrin, bipenthenone, lambda, then perfenophos, and new products which we are introducing, clobindamide, pymetrozine, beta-cyclothrin, flonicamide, epithrol. These are the products which we are having the basket, and their formulation. These are technical names I have mentioned.
Right.
There are their formulations also.
Okay, sir. So should we proceed for Q&A session?
Yeah.
Or you want to cover anything else?
In the Q&A we can cover if anything you feel I missed out.
No, that's
One
fine.
more point which I just want to highlight actually in the recently the new developments which has happened. This company, the promoter group, is the first generation who has started this company, have taken retirement from the last board meeting which we had. So now the new board has been constituted where young directors have taken over. Ankit Patel as chairman, then Mr. Darshan Patel and Karna Patel. These are the 3 MD and then executive director. So with a lot of energy, enthuse, and the new management has taken over, and they are now fully responsible how to run the show going forward.
So now we can proceed for Q&A session. So participants, anybody wanting to ask the question can raise their hand or they can post their questions in the chat box. So we will just wait for a minute and then we will start with Q&A. So first question we have is about how will the large capex, so I'm audible, right?
Yes.
Yeah, how will the large capex in titanium dioxide be viable given the huge fall in price? What kind of EBITDA per ton we are targeting? How is the plant stabilizing?
Okay. As far as titanium dioxide is concerned, so we have acquired this unit where we have paid 132 crore upfront by acquiring this unit, and with the huge infrastructure, which is sufficient, as I mentioned, to go up to the 200 ton. So 70,000 capacity we can go from the existing 16,500. First phase we have completed, and total capex outflow, including our initial investment of 132 crore, is 275 crore. This is the phase one. This is the capex which we have already completed. And this capex has been funded by support from the holding company, Meghmani Organics Limited, and debt we have taken for this. As of now, debt we have taken around 175 crore, debt in Kilburn Chemicals Limited. You rightly mentioned there was a lot of volatility into the raw material prices. When we have acquired this unit at that time, prices of rutile grade was almost 265 rupees per kg, which went down up to 160 rupees in November last year, which again had come up around 190. So which we expect in the coming period. I think again it should go anywhere between 200 to 210, should stabilize at that level. On the another side, which I mentioned, we are also putting up a captive power plant because to reduce the power cost. So that plant will also be ready by the next quarter, and from January onwards, we see this power generation will be helping into the reducing the cost. So this is the way, and it will be moving up. And earlier we planned that we will be doubling the capacity immediately. So which we have now, looking into the overall market scenario and the capex point of view, we will be stabilizing this plant and running at the full capacity. And we will, once we are fully sure and comfortable and plant is running at the optimum capacity with the good quality, then only we will be capitalizing the plant. So earlier, which we announced 600 crore, so we are not going to spend the second phase. So we are completing only the first phase.
Yeah. And so also, if you could quantify the kind of savings this captive power plant will bring in.
No, as far as power plant is concerned, because if the power is taken from the grid, Gujarat government, so it is around 9.20 rupees per unit. While if we will be producing, so I think it should be anywhere in the range of 5 rupees to 550 rupees. So to that extent, it should be half.
Next question we have from Preet Malde. So you can ask your question.
Yeah, thank you for the opportunity. I have a few questions. The first one is that do we see enough demand in nano urea as of yet? I mean, we are the only other players other than IFCO to have put up a plant in this industry, and do we see enough demand for nano urea to project a top line of say 1,000 crores 2-3 years down the line, because that's our target. So can I get some clarity on that?
Okay, sure. Because to start with nano urea, because it is the new innovation which the country should be proud of, and IFCO has come up with this new technology. where this one bottle of 500 ml is going to replace the one bag. It will be equivalent to one bag of granular urea. Initially, because since years there is a particular way of applying urea into the field, and farmer is acquainted with that practice. So any change is not easy one, because you have to change the mindset and you have to demonstrate on the ground that this product is efficient and it is environment friendly. So what has happened actually, IFCO has started 2 years back, but more it is a government, you can say, initiative. So on the ground level, the field level trials have not taken place to that extent. So, and second is because this fertilizer itself is a very voluminous product, lot of multinational involved in that. So there is another lot of resistance is supposed to come at the very beginning. But going forward, which we see in the next coming years, 2 to 3 years, how the overall fertilizer space will undergo a major change from the logistic point of view, from the application point of view. Now, if you see in this case, the logic behind that is that first of all, India has import of urea out of 330, I think 90 million tons are being imported. So target for the government is first to make it zero, and they have announced by 25. So this urea import could be zero, and for that I think 3 plants has been put up by IFCO, and 1 plant of Meghmani should be sufficient to meet this requirement. And government is going to save lot of subsidy and on the exchange, because we have spent lot of money on the import of urea, and to manufacture in India we are importing gas as well. So at the both fronts, government will save the foreign exchange and huge subsidy which is being paid today. So government focus is that. To promote that now, recently government has announced PM Pranam Yojana, where how much subsidy will be saved to give incentive to the states. If 50% subsidy saved by the particular state will be given to them. So if it is 100 rupees saved on the by using this nano urea, so 50% will be handed over to the state. So that will also now incentivize all the states, and they have a reason to promote this. And this is environment friendly. As far as from the application point of view, normally there are 3 applications. One is at the time of sowing, then after 30 days and 45 to 50 days. So first will be the natural, which is the conventional urea will be used. Rest 2 application, which is the folio application, can be replaced by nano urea. So what we have started actually, we have already started the seed marketing. We are getting manufactured from IFCO and supplying our under Meghmani nano urea brand. So we are already supplied in the states. We are getting registration in 4 states initially. So we are putting demos with the farmers. Then we will be arrange visits to the farmers and see what is the results there. And then it will happen. But interestingly, we have more than 3,000 partners in the country who are existing products being supplied by through them. So they are getting registration for the fertilizer. For them, it is a new opportunity. They are getting business, ready-made business, where today they cannot handle because it is a volume product. Now it is a 500 ml bottle. So they can place in one corner 100, 200 bags, equivalent bottles, and they can supply. So this is the ready-made opportunity available to them. We are also, this is the beginning, we are also coming up more products, 4 to 5 products in the next 6 months time to support this actually, and a bundle of this. There are another nutrition which will be required. and we are coming with those products as well. So we see there has today it is a push factor because it has to be, you can say, forcefully, or you have to sell. But tomorrow we see it is going to be a pull factor. Farmer will also see the convenience because today he has to hire a vehicle to carry 5 bags, and going forward he can, in his carry bag he can carry 5-10 bottles, so equivalent. So that will also save cost for them, and overall I think in the 2 to 3 years time we see, I think uh, everyone is going to understand how, and by that time lot of demonstration is going to happen, people will see the results, and then things will change. And one interesting fact which I can share with you, and you might be aware, in this year paddy sowing in the Punjab has been done the way other crops are being done, are cultivated, like like wheat. We sow the wheat in the same way paddy has been cultivated. While normally what happens when you sow the paddy, so you have filled the field with the water, and then you cultivate it, and then manually you are plowing in that. But this year government incentivized and gave 1,500 rupees as a subsidy people who are adopting the new practices, and almost 40 to 50% people have adopted the new practice and they found the same result. So at the farmer level, seeing is believing actually.
Sir, I totally understand your point, but there are many variables in this industry, many ifs and buts. I don't see this panning out the way we expect because we are betting highly on the government doing what they've said, the government planning to totally stop imports of urea by FY25, and we are betting highly on that. So I don't see that panning out, but that's all right. And secondly, I want to understand about the titanium dioxide plant. So, what kind of margins do we expect? And secondly, the markets that we'll have to cater to for titanium dioxide will be totally different. And it will be, if we start catering to the existing paint players, the switching cost for them is very high. So how are we going to crack that? And how are we approaching the new players like Grasim and JSW? What is the game plan over here? That's what I want to understand.
First, let me clarify on the first point, the government initiatives and all that, what I have mentioned, that is one side of the story. So that is the government focus, why government is focusing. So while at the ground level, lot of development work has to be done, and it has to be demonstrated by simply promote advertisement by the government. It will not make the farmer use that actually. So that's why we are doing the field trials. And this product which has come up is after the field trial. There is already tests which has been done, and it has been proved that there is a 7 to 10% increase in the yield. So that is the way. It will not be by simply advertising by the government and product will be successful. And we are putting our efforts. Our team is dedicated team which is will be there and putting demos with the farmers. And then farmer, once the product is seen by them, it is useful, it is efficient, then only things will change. So 1,000 crore which we are talking about top line, it will not come in the next year. It is coming gradually when the full year phase. So we also see in the next year plant can run at the 20%, 30% capacity. And then gradually 50%, 60% it can go up. And coming to the titanium dioxide, titanium dioxide is also a commodity, and the margin fluctuate between 15% to 25% in the normal circumstances, where in the good times you make up to 25%, and normally it is 15 to 17% are the margin which are made. As far as customer are concerned, so we are already supplying our pigment, phthalocyanine pigment, we are supplying to all the paint manufacturers. They are already our customers. So market is already ready, but customer approval is required, which takes 2 to 3 months time. So once our product is out, so that will be given to them, and approval takes 2 to 3 times. So Meghmani is not new for the customers. We are already supplier to them for our existing pigment. So we feel it should not take that much time, but definitely when the product has to be approved, it takes its own normal time, 2 to 3 months time. So this is the way it is coming up. And we see because in this case, normally there are a lot of small manufacturers also who are dependent on the trading community, who are dependent on the traders. So they cannot import directly, because today in India, titanium dioxide capacity is only 80,000 ton, and production is around 60 to 70,000 ton, and rest is being imported. So everyone is not importing. There are big players who are importing and supplying to the small manufacturers. So for them, domestically available, so they have now better reach, and we see from the market perspective, there should not be any issue. One more point which is going on is as far as pricing is concerned. So because it is an import substitute, and government is also looking for some sort of safeguard duty or anti-dumping duty. So on this product, which may come up in the coming period, so that can be helpful and increase the margins also.
Thank you, Mali sir. We'll move on to next participant. That is Giriraj Daga sir. So you can ask your question.
Hello. Yeah.
Yes, sir. Yes, sir,
Yeah.
you are.
So just to follow up there. So let's say in the current price you mentioned 220 and 220 where it should stabilize. Like currently it is at that range, or it's like below it currently on titanium dioxide?
On titanium dioxide, actually there are two grades of for titanium dioxide. One is anatase grade, second is a rutile grade.
Yeah.
The price gap between these two remains 20 to 30 rupees. The price is coming for anatase grade, which is coming up currently, is around 80, 180, 185 rupees.
180 or 185.
Yeah.
Okay. So current price we are like at a peak capacity, we will reach about like 270 crore kind of a number, right? Is this right thought process?
Yes, next year we are expecting anywhere between 250 to 300 crore should be the top line.
And you are saying these prices are lower than than normal range, so margin should be at lower end of 15%, right?
Yeah, around 15% we can expect.
Okay. Second, on the agrochemical side, like we had commissioned the MPP plant last year. So how is the ramp up this year?
This year, because the overall there is a slowdown globally, so plants are not running at the full capacity. We are running plant at the 40 to 50% capacity only. So from the next year onwards, we can see ramp up in these capacities.
Like have you got any new orders in the last, let's say 3-4 months, which giving you confidence that probably things might start looking good from January onwards?
In case of export market, because all our customers globally follow calendar year, and they don't hold inventory in the Q3. So for us, Q3 normally remains a soft quarter. So order starts flowing in the month of October, November onwards, where we supply in the December and they receive the material in the month of January.
Okay. Last thing, like this year, what is the capex number we are looking, and what is the capex guidance on a next year side?
Actually, this year, as earlier I stated, in the agro division, so we had planned for the second phase of expansion, which we have put on hold. We are not doing any new capex in MOL, standalone company. We are finishing our Kilburn Chemicals capex, titanium dioxide only, where the first phase has been completed, and we are completing only this cogen power plant, so which will be commissioned in the next quarter. Apart from that, we will be completing our nano urea project by March 24. So total capex in this year we are expecting should be anywhere between 150 to 160 crore is the capex which we'll be doing in this year only.
In any broader line of next year?
Next year, we will be evaluating in the Q4, depending upon the overall situation. Then we can proceed on the expansion in the next phase in titanium dioxide and in the agro division. But that will be evaluated in Q4, how things pan out.
Okay, sure.
Thank you, sir. Thank you, Dr. Sir. So now we'll move on to next participant. That is Mr. Ganesh Nagarsekar. Yes, sir, you can go ahead and ask the question.
Hello, sir. So primarily two questions from my side. So firstly, on the titanium dioxide part, if I understand it correctly, it's primarily an import substitution sort of a market. So from a global supply point of view, how does the picture look? So has there been any reduction in terms of Chinese supply because of pollution norms and stuff like that? Or is the broader supply stable or growing? So how does the broader global supply look for titanium dioxide?
You are right. Actually, in case of as far as global capacities are concerned, we have heard that in Europe there are certain capacities which have been closed.
Got it. And Chinese capacities are still upstream, so as in they're still going, or how is that picture looking?
Chinese, because China itself there is a low demand currently.
Right.
So capacities are not running at that capacity.
Got it.
Yeah.
Understood. And the second question is on the pigment side. So over the last 2 years, the business seems to be struggling a bit, especially on the margin front. So broadly, how do you see that changing, and when do you see that a recovery coming in, at least in the pigment margin front?
So in case of pigment, now as I stated, one is hallucinine pigment, green and blue. Second is our titanium.
Right.
Is hallucinine pigment normally we have 10 to 12% margins, but from Q2 of previous year, so this is under tremendous pressure.
Right.
And currently also we have not seen that improvement. It is just running at the same pace as the last quarter, and we expect from January onwards improvement can start. Still, as per the information available, there is a inventory with the channel of high cost inventory that is getting liquidated. But now, looking into the current raw material prices, that has also bottomed out. From the customer perspective, now people say prices will not go down further. So whatever demand is coming, so under anticipation that henceforth prices will go up. So people are blending with their existing inventory and then selling into the market. But real demand still it is not there as far as Europe is concerned, as far as US is concerned. So because it is under non-essential category. So people are able to postpone their buying decision. So till the time inventory is liquidated and fresh flow of inventory will start. So we see pressure may continue for another 1 or 2 quarters.
Understood. Thank you. Thank you so much, sir.
Thank you, sir. Now we'll take a few questions from the chat box. We have a question from Mr. Venkat Ramna. When will Anno Urea will commercialize?
When?
Will Anno Urea commercialize?
Nano urea.
Yeah, Anno Urea.
Yeah. So this plant will be capitalized in the fourth quarter.
Okay. Okay. Next question we have is India had a huge advantage in the pyrethroid industry where we had taken over China, but it seems like there had been a lot of dumping by them. How do we see the industry structure? In India, also a lot of small players are expanding in the pyrethroid products.
Yeah. So we have capacity in pyrothyroid range of products, and we have not expanded our this range. So what we have come up with the high value latest of patented products, which we said bipenthenone lambda, which are relatively new as compared to pyrothyroid range. So we are not expanding into pyrothyroid range, but as a philosophy of the organization, whatever product we are manufacturing, so we are backward integrated. So we manufacture our own intermediates and then we remain competitive with China.
Okay. Next question we have from Samira Midha. Annual revenue potential from nano urea business?
So not in this year because we will be commissioning the plant in the fourth quarter, and next year, as in the earlier responding to the earlier question, because we have to do a lot of work at the ground, development work. So and then gradually it will go up. So which we expect around 20 to 25% capacity plant should be running. So top line perspective, it could be any 200 to 250 crore in next year if things goes well.
Like you're talking about FY25, right?
Yes, we are talking about 24-25.
Next question we have from Mr. Anurag Runwal. What is the capacity for titanium dioxide that would be commercialized next quarter? How will the ramp up happen? Peak revenue and margins.
Okay. The current capacity is 16,500 ton, which we acquired. So that is under trial production, so which will be stabilized in the next quarter. On the doubling of the capacity, which we had planned and we already announced, we have put on hold. So once we stabilize this plant, and then only we will take a call for the expansion and doubling the capacity in the next year. So that call will be taken once we stabilize this plant and with a good capacity and quality. So after that, call will be taken.
Okay. And what about the margins, peak margins, which we can reach?
Margin I mentioned because it's a commodity, it ranges from 15 to 25%. So depending upon the cycle, so around 15% is the lower end we can expect.
Our next question we have is, what is the nature of the power plant? Is this coal-based?
Yes, it is a cogeneration power plant because we need steam also into the plant. So that's why we put the cogeneration plant. So with the thermal, with the boiler, we put the turbines as well. So it is a cogeneration and coal-based. It will be coal-based and multi-fuel.
One more question. In case of agrochemical, what is B2C strategy of the company?
Can you repeat? Could not hear.
In case of agrochemical, what is B2C strategy of the company?
Okay. Now, as a strategy, because we are export oriented, 80% revenue coming from the export. So one realization which have come is because we have to be present in domestic market also. There should be a sizable presence. So keeping in that mind, so now if we see going forward how this will be the spread, in case of pigment, we have around 500 crore of top line, which is 80% coming from export. This titanium dioxide going to be the domestic. So where almost 50-50 will be there from the geographic spread point of view. Same way in case of agro division, so with this nano urea plant coming up, so it will increase our domestic presence. So currently in our brand business, we have in the B2C business, we have around 10% of our top line in agro division, which we feel going forward, it should be 15 to 20% as we grow. Overall basket should in the domestic market should also grow.
Next question we have is from Mr. Vinay Rokadia. What is the gross and net debt, cost of borrowing, and guidance on repayment?
Okay. As far as debt is concerned, MOL standalone, we have around 400 crore of debt. And in Kilburn Chemical, we have 175. So total is 575 crore of debt. We have around 150 crore of receivable from Epigral through redeemable preference share. So out of 575, if we reduce 150, so balance is our net debt. And cost of debt in MOL standalone, we borrow in foreign currency, where our average debt cost is between 4 to 5%. In case of Kilburn Chemical, which is 8.5% because it is INR borrowing, and in case of Meghmani Crop Nutrition, we will also be borrowing into the domestic currency INR only. So we expect it should be also in the same range, 8 to 8.5%.
Okay. And any guidance on repayment?
Repayment, we have repayment of 140 crore per annum of our long-term debt. Debt which we are seeing today is the peak debt. So as a philosophy, our debt equity should not be exceeding 0.5. So whatever debt is today, so whatever we will be repaying, if required, we can take the new debt, but our debt will remain at this level only. So this is not going to increase.
We are done with the questions. Anybody having any more questions can raise their hand. We'll just wait for half a minute or so, and then we can close. We'll just wait for half a minute. So there's one more question. There is around 5 deals happen. 5 deals has happened this year. So those are JDAs or outright?
Can you repeat? Sometimes your voice cracks.
Yeah. Can you hear me?
No,
Hello.
now it's clear.
Yeah. So I think there had been 5 deals this year.
5 deals.
5 as in 5. Okay. Notice. Okay. Okay. I think there is one more question. What is the working capital debt?
Working capital debt is 275 crore. This is a range, remains in this range 252 to 275 crore.
Okay. And the next question is from Samira Midha. EBITDA margins of TiO2 ranges between 15 to 20%, 25%. Is that right?
Yes. Yes.
Okay. Yeah. So I think we don't have any more questions. So thank you so much, Shahil sir, for giving us such a great insight on Meghmani Organics. I'm sure the participants will feel very enriched, and they will get a lot of in-depth analysis about the company. So thank you so much, sir, coming over and accepting our invitation and giving such a brief to our investors and clients. And thank you all the participants for joining us. And thank you so much on behalf of Arihant Capital.
Hello.
Hello, yes, sir.
Yeah, before we conclude, I just want to once again thank everyone.
Yes.
And I just want to highlight your point from the deal perspective, which you just mentioned. So what we during the COVID period, so no travel were happening. So after that, so all the multinationals have visited our sites. So the infrastructure which we have created, they are very much impressed. So we have done one long-term supply contract for 5 years, which is 800 crore of value. So, and we are expecting going forward also a lot more this type of long-term supply contracts with the multinationals.
Okay.
And with the new infrastructure, we in our agro division, we have got the responsible care logo, which is the highest recognition for safety in the chemical sector. So I just want to share with the participants that this year, because overall market scenario situation is subdued, but we have very exciting journey going ahead, and I think long-term perspectives are very exciting. We will cherish that actually. And thank you.
So all the best, sir, and thank you so much.
Thank you.